Monday was the Iran rally. S&P up 1.65%. Easy. But two stocks crystallized something more than a headline bounce, and those are the ones I'm looking at Tuesday. NVDA and SPCX. Two completely different trades. One is a conviction bet, the other is a mechanics play. Let me walk you through both. Look, if you're new here, hit subscribe. Free watch list link in the pinned comment. NVDA first. Up 3.54% Monday, closed at 212.45. That's a good day. But the real signal came after the bell. NVDA launched a $25 billion bond. First time in 5 years, they asked for 200. The market gave them 85 billion. That's 3.4 times oversubscribed. Let that sink in. A company raises debt, and the orders come in at 3 times what they wanted. That's not buying the stock. That's buying the balance sheet. Smarter money than equity traders. Jensen Huang says the chip shortage isn't going anywhere. It'll keep going for several more years. Wedbush says Grace Blackwell demand is surging. Clients say these chips are getting harder to get, not easier. That's a pricing power signal. NVDA at 212 is still 14% below its May high of 236. The bond says the smart money isn't worried, so what am I doing? My setup, pull back to 209 to 210. That's Monday's open. If NVDA dips and holds there, that's where I'd look. Stop at 204, below the 50-day. Target 220. That's the next resistance. If it breaks 220 with volume, the May high comes back into play. One risk, FOMC is tomorrow. A hawkish wash could compress multiples across tech. But that bond demand at 3.4 times tells me the buyers are looking past the Fed meeting. It's a conviction trade with a catalyst. SPCX is different. This isn't about the company, this is about the mechanics, and they just went to another level. Monday close, 192.50, up 19.6% on the day, opened at 171.74. High was 193. That's 56% above the IPO price of 135. In 3 trading days, green shoe got exercised, fully. IPO is $862 billion. Float is only 4.2%. And the stock ripped almost 20% in a single session with 256 million shares traded. On a 4.2% float. Do the math on that velocity. Here's what's changed. The 175.50 lockup trigger? Blown through. If SPCX closes above that level on 5 of the 10 trading days before Q2 earnings, insiders get an extra 10% of shares to sell. Monday was day 1 above the trigger. Tuesday brings options. In a stock that's up 56% from IPO with a 4.2% float, options don't measure volatility, they amplify it. Call buying at these levels could push SPCX above 200, fast. But the gamma unwind works the other way too. Options cut both directions. Morningstar says fair value is $63. CFRA has a sell rating at 115. The stock is at 192. The fundamentals gap isn't a debate anymore. It's a spectacle. My SPCX setup. And this is important because the easy money was Monday. I'm not chasing at 192.50. If it pulls back to 180 to 185, prior resistance, now potential support, that's a buy zone with much better risk/reward. Stop at 168, Monday's low. Target. Ride momentum above 200. But I'm out before Thursday. Triple witching. Possibility of gamma unwind. Lockup trigger live. 3 reasons not to get married to this trade. If SPCX doesn't pull back and rips straight through 200 on the options open, I stay out. Let someone else catch the top. This is a mechanics trade that just got a lot more dangerous. The velocity is extreme. The fundamentals gap is extreme. The calendar is compressed. If you're playing it, you better know exactly when you're leaving. One question, NVDA conviction or SPCX mechanics? Which one's your style? Drop it in the comments. 2 setups, conviction and mechanics. One has a balance sheet behind it, the other has a gamma trigger. You don't trade them the same way. You don't hold them the same way. Know which one you're playing before you put money on the table. 2 setups, conviction and mechanics. One has a balance sheet behind it, the other has a gamma trigger. You don't trade them the same way. You don't hold them the same way. Know which one you're playing before you put money on the table.